Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by Executive Chairman Rod Baxter of Podium Minerals, ASX code POD. Rod will present a company update regarding metallurgical test work results and also participate in an extended Q&A. If you have any questions for Rod, you can submit them via the Q&A tab at the bottom of your screen. I am expecting a large number of questions, so we'll get through as many as possible and then hand a full report over to management. A recording of this webinar will be available on Market Open and Podium's communication channels within the next 24 hours. So I'd like to introduce our guest, Rod. Welcome to Direct Connect, and over to you.
Thank you, Stuart, and welcome to all of you who are attending this call today. We've been wanting to get in front of our shareholders for some time, just looking for the perfect opportunity, and today has presented that perfect opportunity with the announcement of our new groundbreaking concentrator circuit. So a little bit of admin in terms of the run sheet today. I'll be providing an update on the company and on this new groundbreaking concentrator circuit, which we announced this morning. I'll be focusing on the process flow sheet, the performance that we've achieved to date, the products, and most importantly, the next steps and where we plan to take the project and the company. And then I'll tie this in at the back end to introduce the capital raise that we announced this morning. For this purpose, I'll follow broadly the slide deck that was lodged on the platform a few hours ago. Some of the slides I may speed up through, and you can always read them, at the back end, because I want to give as much time as I can to questions. And at the end, we will have time to pose questions. And as Stuart mentioned, the call is going to be recorded, and we'll place it on our website for everybody to view in due course. So let's talk a little bit about the company and about 2025. And, you'll forgive me if I say that I believe that 2025 has been a very big year for Podium, a very successful year on all fronts. And of course, it isn't over. There's still 2 months to go, and there's still some more work that we still want to achieve. But the concentrator breakthrough is the key to unlocking Parks Reef. I can't stress this enough. However, it's only one of several significant corporate strategic milestones that the company has delivered this year. And before we go into it, the concentrator, I just want to tick off on some of those just to remind everybody about the very solid base that has been created in the last 12 months or so, for this business, which will be a part of the commercialization and the way forward. So in February, we joined the very prestigious World Platinum Investment Council. This opens up for us a premier source of market intel and networking opportunities. And it counts, the council itself counts as its members some of the world's largest PGM producers, which is very prestigious for us to be a member of that, and we're the only Australian member. Straight after that, we also completed the purchase of the Rangewell Nickel project with its significant nickel laterite endowment, which is adjacent to what we believe is an already large Parks Reef PGM project. And we see this as a counter-cyclical acquisition, which could unlock, a number of opportunities for the project in terms of synergies and project development. On Parks Reef in May, we reported a new resource estimate for the copper-gold mineralized zone, and this mineralization lies directly above the PGM zone. It contributes significantly to the Parks Reef basket of metals, and it enhances the scale of Parks Reef and adds significant optionality for the future. So these are significant developments which I don't think have yet been fully digested by the market. And of course, over the coming period, we'll be talking a lot more about those and how they leverage this business going forward on the back of the concentrator. In themselves, they set a Podium to enter into an exciting phase of growth and value creation. But of course, that's not all. The main focus today is to share the very exciting breakthrough in our metallurgical project, the new concentrator circuit, which is at the heart of the processing route and will be key to unlocking the substantial value that we have at Parks Reef. A little bit of background on that. The concentrator was born out of an extensive and highly intensive program of test work in the lab. And I was a part of a lot of those. I had the pleasure of actually being in the lab for a number of those tests, which was an amazing experience to see the gestation and the evolution of the learning, which was supported by our group of incredible PGM experts. All of the experts that we have on our team have all operated or built plants in the last 10 to 20 years. The circuit has delivered some outstanding results during these lab tests. And what makes this concentrator so noteworthy? Well, first of all, the overall recoveries, they're about 80% for the key three precious metals, platinum, palladium, and gold. And when I talk about 3E through this presentation, I'll be talking about platinum, palladium, and gold, those three elements. In this presentation, we're not focusing necessarily on the others, although you will see them reported in our announcement. Second thing about this concentrator is that it will produce two discrete products. And these are an upgrade ratio of 50 times, which is an incredible achievement. And collectively, these two products will grade at a notional 82 grams per ton of 3E. We'll get into a bit of that later. And we believe these high-grade products and the quality of those products, particularly notably that there's almost close to zero deleterious chrome in our products, will enhance their compatibility as potential feed to existing downstream PGM refiners. Most importantly, that statement, we believe, will unlock different revenue pathways for Podium. Just the statement, in fact, that the performance to date exceeds our original expectations and project targets that we published about a year ago. So, we're very excited about the circuit. It's truly a game changer for Podium, and we believe for Western Australians' aspirations to develop a PGM industry. It establishes a very strong platform for us to advance Parks Reef, and our focus going forward is going to be revolve around the pilot scale-up to accelerate feasibility studies, and we'll talk about that quite a lot in later slides. We'll also be focusing on lab-scale work to unlock the massive resource optionality that we have in Parks Reef, and these are in the different mineralized zones. We'll do some targeted drilling to confirm depth continuity below the 250-meter depth extent of the existing mineral resource. And that'll be to infill some of the holes between 250 and some of those deeper holes at 500 that were reported a couple of years ago. And we'll also do some early stage resource work on Range Well. So the way forward is going to be a very busy time for this business. And that's the reason why, we've announced the capital raise today of $12 million to fund that very exciting phase. So in summary, 2025 on that slide was a year of very exciting momentum that has been building on all key fronts for the business. The first one is in the PGM market, and you'll see PGM prices have been recovering. I'll talk about that in our strategic initiatives and the business thrusts, and also momentum in what I call the engine of Parks Reef, of Podium, which is the Parks Reef Project. So just quickly sprint through a couple of slides. Those of you who are familiar with Podium will know that corporate structure. Just a reminder, our top 5 shareholders or holders count for about 28% of the register, and in total we've currently got about 2,750 or so shareholders that make up the register. One important reminder that I'd like to leave everybody with on this slide is the takeaway, is that Parks Reef is located in a very mining-friendly part of Western Australia. There's a legacy and a history of successful mining in that area, which I think is really good for us in terms of de-risking the way forward. And we've also already got granted mining licenses as well as native title arrangements in place. And I'll leave the rest for you to review later. Just in terms of this slide 5, and before we move into the detail around the metallurgical breakthrough concentrator, I'd like to just remind you of a couple of highlights about Podium's raison d'etre, and that's namely, the ore body, the Parks Reef ore body. By global standards, this is a globally significant ore body. It's large by any standards and measures. It extends across 15 kilometers in length. And to date, we've only delineated a resource down to 250 meters. So the 7.6 million ounces of 5E metals, plus all the other tons of copper, nickel, and cobalt, we believe are potentially only a fraction of the overall mineral endowment. And we know this because we know that Parks Reef's open at depth. We've confirmed that by drilling a few 500-meter holes, so holes at 500 meters. And one of those in particular, you'll see on the left-hand side there is PRDD003, has in turn some very impressive intersections. And we've also done geophysics work that confirms hole depth to potentially 2 kilometers, or resource depth, should I say. So as part of the work program going forward, we're going to be drilling a couple of targeted holes below and beneath the 250 resource boundary, just to confirm that depth continuity and give a little bit more comfort around the actual extent of this ore body. But it's not only just the size and the scale that we find exciting about Parks Reef, it's also the high-grade mineralized zones that you'll see. So, bear with me as I talk you through the slide. What you'll see is high-grade mineralization if you look at the meter-by-meter grade distribution across the reef package in that that right-hand side picture. And that's just one of the typical holes. Most of our meter-by-meter intersections look very similar to this. And you'll see significant elevated grades in the hanging wall, higher grade hanging wall. In this case, one of those meters hits above 3.5 grams a ton. And you'll see elevated grades in the footwall, and that's where most of our rhodium and iridium is. So, high-grade zones in the PGM zone. But what this one also shows is the copper gold zone that I talked about earlier. And that's above the PGM zone. The gold in this case is the yellow bars, and the copper is the black line. And in this case, copper peaks at 0.6%. So orientating yourself around this ore body, if you look at the left-hand side picture, that depicts an end innovation, and you'll see a plot of a very steeply dipping reef package. The PGM zone's in grey, and the copper gold zone's in the green and the blue. And in this case, the area above, sort of from surface or a couple of meters below surface down to roughly 45 meters, that's the oxide zone. So when I talk about different mineralized zones at Parks Reef, I'm talking about all of these. The bulk ore, that in this case stretches from meter 83 to about 107, the high-grade hanging and footwall PGM, the copper, and also what has to date been an untapped resource is the oxide zone. And a key point to take away from the slide is that all of these mineralized zones present grade opportunities for grade optimization going forward. So let's turn our attention then to the concentrator flowsheet. And today, as I said at the start, marks a major milestone in the development of the metallurgical process for Parks Reef. And the flowsheet has its genesis over 120 tests in the lab. A lot of work on geology and mineralogy, and the concentrator circuit itself, in addition, has been verified through tests on composite bulk sulfide grading 1.65 grams a ton. So all of the results that we're talking about today are based on that 1.65 grams per ton feed that we put through the concentrator. The concentrator comprises two steps, a conventional flotation step. And it's important to focus on those words, conventional flotation, because it adopts existing technologies that are widely used throughout the PGM sector, particularly in South Africa. So conventional flotation followed by a very innovative value recovery circuit, and that's our title for that secondary circuit. And that uses standard gold industry technology to recover value metals from the tailing stream that comes from the flotation circuit. And we'll get into a bit more detail on this in the next few slides. So that concentrator delivers 80% recoveries, as I mentioned, mass pull of about 2%. And the two high-grade concentrate products. The first, and you'll see them in the table, being a flotation concentrate, which grades about 57 grams a ton of 3E, and the second being a high-grade PGM concentrate from the innovative value recovery circuit, which grades about just over 3,000 grams a ton. And importantly, as I said at the start, these have got ultra-low levels of deleterious chrome. The flow sheet's a game changer. There's no doubt about it. And we believe that, those products that we produce will be compatible as potential feed to the PGM refineries and the refiners. But we also believe that these products are going to open up potential routes to monetization. And think there about sale, think about toll treatment, think about even blending. And those are going to open doors for different revenue streams, not only from those two products, but also from the mineralized zones. So if you turn to slide 10, then this sets out the flow sheet in a little bit more detail. And you can see conventional crushing, milling, and then into the flotation circuit. So it's a two-step process, flotation, followed by value recovery. And then you see on the sides the products that we've set out for you. In this case, we've also showed the copper and the nickel content in those two products. And then the notionally blended product of grading over 82 grams a ton. Plus 1.3% copper and 1.6% nickel. ultra-low chrome content. And I'll repeat that, these use standard PGM precious metals technologies, proven and de-risked. And the importance of that is that we're not talking here about having to de-risk the technology. This will allow us to accelerate the development of this project. The project way forward is all about the process flow sheet. And secondly, most importantly, this flow sheet gives us a lot of flexibility and adaptability of the two-step process to allow us to accommodate those different mineralized zones at Parks Reef. So slide number 11 just takes us down, the next level of the flow sheet. Won't talk too much about that. You can come back and look at this at your leisure, but I think it's important just to note that this flow sheet allows us to selectively float the different minerals. There's a fast floating section to recover the fast floating fraction, very low residence time. Then it's followed by standard rougher and cleaner cells to float off the slower floating minerals. And you'll see some photographs of fast, medium, and slow floating processes that have come from the lab. I particularly like that middle picture because if you look at it very carefully, you'll see a very deep bed and a very stable froth bed. And that's exactly what we want out of this process. The tailing stream then becomes the feed to the value recovery circuit. So slide 12 shows the value recovery circuit, and this is all about recovering PGMs and other metals which don't float in the flotation circuit or potentially lost to the tails. So, if I can use the word, it essentially allows us to take another bite at the cherry, so to speak, and allows Podium, as a consequence, to maximize recovery of those value metals that we're talking about. So consequently, the entire flow sheet minimizes the amount of metals that report to the tailings. And in this case, you'll see us in the bottom left-hand side talking about less than 0.25 grams per ton of PGMs that will report to tailings, which is an incredible achievement, a stupendous achievement. And we always want to have those PGMs that we, in inverted commas, throw away to be as low as possible, because PGMs are precious and they're valuable, and we're greedy and we just don't want to throw them away. So this flow sheet allows us to maximize the recovery of that. Again, just a reminder, and I'll say this a couple of times, it's tried and tested technology. It's been used for decades. And in this case, technology in this process has been used in the Western Australian gold industry for a long time. So to say we're excited about this would be an understatement. And we see this development as an absolute step change for the company and for the project. It potentially unlocks the strategic development pathways across the other mineralized zones that I've spoken about, and it'll generate products that we believe will present a wealth of opportunity for the company. And this flow sheet has as its foundation 3 strategic pillars, and this is how we've been developing the process over the last year to year and a half. It's process, performance, and product. So from a performance point of view, the performance is outstanding to date. Nevertheless, we actually believe that there's still room to possibly wring out further upside through optimization, and that will happen in our piloting phase. Secondly, the 2 products on our horizon will open doors to different monetization pathways that we'll be pursuing in the next phase. And then thirdly, we're going to be leveraging the fact that the process is based on known technologies, known de-risk technologies, and this will allow us to accelerate further development. So for the next steps, these are going to be centering around scale-up piloting. That's going to allow us to validate and optimize the flow sheet at scale. So all about de-risking before we get into production. Secondly, we'll be generating a lot of operating data from that process, real live operating data at scale, which allows us to accelerate feasibility studies, very important, we'll talk about that, and then confirm the product for downstream engagement. So, before I move on to the next steps, I wanted to segue into a quick overview of the market. And now we're on slide 14. So there are 3 key forces that are fundamentally shaping market dynamics. So the first player in market dynamics is supply. And supply is eroding, particularly primary production, which is coming under increased pressure. But recycled supply is not responding either. So this is a market where supply is under pressure, and it's likely to remain that way, for a period to come. This comes against the backdrop of some very resilient demand, growing demand from hybrid motor vehicles, which is setting off slower than affected projected growth in battery electric vehicles. And it's underpinning the PGM demand for autocats that are used in the internal combustion engine motor vehicles. So supply under pressure, demand's resilient. And these forces are driving a market imbalance, which is generating sustained structural deficits in all of the key PGMs and consequently depleting above ground stocks. So the implication of these three competing dynamics is a tightening PGM market. And you can see that evidence in slide 15. And the net result of this tightening market situation has been seen in recent price recoveries for the PGM metals. Here we've just reported platinum and palladium, but you can see it in the other metals as well, particularly rhodium. In this graph, platinum's the dark blue line, and platinum recently traded above 11-year highs. And when I looked at the price this morning, it's still flaunting with around $1,600 an ounce, which is fantastic. And it makes it one of the best, if not the best, performing metal this year. The palladium is the light blue line, also a very pleasing price recovery in the last couple of months. So the next slide, slide 16, contains some really useful information for those of you who have an interest in PGM markets. I won't go over this or the next 4 slides following this in any detail, but just by way of orientating you around them. Slide 16 shows global demand. And the numbers to focus on here is global demand for PGMs this year projected to be about 19.6 million ounces. And that comprises about 7.7 million ounces of platinum, 9.4 million ounces of palladium. Supply projections for these two metals are about 5.5, again 7.7 million demand for platinum, and about 6.4 million ounces of palladium against 9.4. So if you do some quick maths, you'll see that leaves a supply gap, which is not going to be made up by the recycled supply sources. So these are the deficits that I talk about that have been around for the last 3 years and are projected to continue at least through this decade. If we go to slide 17, the key message on this slide then is, and it very clearly shows that in the graph on the right-hand side, is supply is declining. And if you look at South Africa in particular, and North America, you can see supply has been declining over the last 5 years, particularly the major producers of South Africa. So supply under pressure. The next slide talks very much about the robust demand, and the picture on the right there shows demand just for auto catalysts, which makes up a large proportion, about 85% of palladium demand and about 40% of platinum demand. And that's particularly in the face of slower than adopted battery electric vehicles. But that demand's also been driven by what I call emerging green shoots in the jewelry sector. And then slide 19. Which is one of my favorites, talks to the very tight market. The tightening market is a consequence of those two dynamics. And this graph shows the extent of the deficits that have been projected by the World Platinum Investment Council, in this case for platinum. So you'll see all the way through to 29, and this is as far as their forecast. They're expecting platinum to remain in deficit, which is, of course, drawing down above ground stocks. And the green line is the above ground stocks. And they are projecting that by next year, those above ground stocks for platinum alone will be around demand cover of about 4 months. And I'm told that for rhodium, there probably aren't, if any, above ground stocks left. So all of this pyramids up into a very positive outlook for PGM markets going forward. Enough on that, because I want to get back to the key issues around, where do we take this business and talk a little bit about the funding. So everything we do at Podium is guided by those 3 strategic pillars. It's develop the project, position the business for this strengthening market outlook, and generate and pursue strategic business development opportunities for future value growth. And inside the business, we have a dashboard that we monitor, constantly and continuously. You may have seen it in some of our previous presentations, and this is the key activities that the company progresses in the year or in the period. This is the dashboard for 2025, and you'll see evidence of all 3 strategic thrusts in these key activities. And I'm pleased to say that management has delivered on all of these activities this year, the last one being the high-grade Parks Reef material, and that test work will be starting soon at our labs. before the end of the year. Probably far more relevantly, though, slide number 22, because that's the dashboard for the next phase of development. And the key activities that are set out in this slide capitalize on the momentum in the project, and that's been generated through the concentrator breakthrough. And these key activities center around progressing the pilot scale testing program and continue on the theme of process, performance, and product. And I think I hinted at the start that we see pilot testing as an essential progression for the project. It's going to provide us with the opportunity to de-risk development and confirm repeatability and robustness of the circuit. It's all about getting it right up front. No surprises later when we go into production. And that actually allows us to accelerate through the feasibility studies into production. So the objectives of the pilot plant is one, validate the flow sheet at larger scale. Secondly, it's optimize performance and assess efficiency and effectiveness of the circuit for a variety of different feeds. And then three, it's providing product and operating data to accelerate this pathway towards the feasibility studies and engage with downstream refiners. The feed for the pilot work is going to be sourced through a diamond drilling campaign at Parks Reef, very similar to what we did in December last year for this phase that we ran this year. In addition, we're going to be doing some lab scale testing in this next phase around the mineralized zones at Parks Reef. Very important that we start to unpack those as well. We'll be sinking some deeper holes to confirm depth continuity below the current resource, and we plan to restate the Range Well nickel resource as well over the course of the next period. And finally, there's some strategic business development activities aimed at reinforcing the trajectory. It's all about maintaining that momentum and driving growth. So, if we go to slide 23, then, the next phase of this business is going to be building on the current momentum. It's going to substantially ramp up the effort and the breadth of effort. And to fund this, the next important phase, we've today announced a 12 million capital raise at 6.4 cents a share. 5 million of all that be through a placement, and I can confirm this morning that we've received firm commitments for the full amount of that placement, and $7 million through a non-renounceable rights issue. So the key terms are then on this slide 24. I'll go through some of these for the record. The rights issue and the placement together, we'll see, if successful, Podium issue about 187 million new shares in total. It'll be conducted, the rights issue will be conducted on a 1-for-8 basis. So that means, an entitlement to 1 share for every 8 shares held. And, all the information around the discounts are at the bottom of that slide on the left-hand side. Lewin Wealth and Cumulus Wealth are together acting as joint lead managers for the raise. And Lewin will underwrite the rights issue, and the underwriting agreement will be signed just prior to lodgement of the offer booklet. Importantly, and I'm sure everybody will want to understand the use of funds, the use of those 12 million and how that comes back to our dashboard that I showed previously. And, I'm very pleased to say that about almost close on 85% of the funds are going to be spent in one way or another on activities progressing the project. So a total of 6.5 million will go directly for concentrator circuit development, covering test work in the pilot plant, sourcing the feed material, and generating flow sheet information to unlock the optionality through those mineralized zones. About 2 million we'll be spending on deeper drilling and additional resource clarity through some downhole work and some other geophysical work. We want to put $600,000 to strategic business development to unlock those value-adding pathways that we've developed already, and about 1.6 million for working capital. Some of that's actually going to include corporate capacity to support the next phase of the project. So there's no waste here, there's no excess. It's a very tight budget, it's a tight program going forward, and it's all focused on making sure that we keep that momentum that's been generated over the last 18 months in the project, move the project forward. If we look at the indicative timetable, some of the dates that are worth noting is the settlement of the placement will be next Monday, scheduled for next Monday, the 6th of October. Can't believe it's October already. The record date is next Tuesday, the 7th. The rights issue will open on Friday, the 10th, and then it'll close on Tuesday, the 21st of October, unless we extend that period. Right. Into the home straight. Slide 27. We feel that the tides is turning for Podium and for the PGM sector. Why am I confident to make this statement? I think firstly, it's the groundbreaking concentrator flowsheet. It unlocks the next stage of Parks Reef development, and it generates, substantial momentum and energy around this project and purpose around this project. Secondly, our metallurgical breakthroughs come at a pivotal moment for the PGM market, which is navigating tightening market conditions, and the results of which have been felt in a rebound in metal prices, particularly for platinum, but also for the other metals. And this is generating renewed interest in the entire suite of critical PGM minerals and a focus on the PGM sector. So the time couldn't be better for us. And thirdly, the foundation of the company's future strategic development pathways have been well and truly laid, and they're up to us now to evolve and take them forward. So, I believe that this is a very strong foundation, and it's finally translating into some growing interest in Podium. So, as we continue that momentum around the business and progress each of our strategic fronts, I do expect to see the interest reflected in our share price. And that's what this slide is all about. Without a doubt, this company is undervalued. And why do I say that? Because if you look at the benchmarks of our EV per ounce against those of our peers, it's clear that there's an opportunity for a re-rate here. And we believe that as we build that momentum and continue to build that discovery around the business, this is going to change and drive a much needed and desired re-rate of the share price. So taking you to the last slide, in closing, the next phase of the project will see us build on the significant achievements and the very strong foundation that we have at Parks Reef and in the PGM resource. And our plans for the business capitalize on the momentum and energy that we've generated through our concentrator breakthrough today and the growing positive sentiment towards platinum group metals in the industry as a large. Now, I think we've laid the foundation over the last 18 months on a number of strategic fronts, and we'll begin to progressively unlock these as well as we progress the pilot plant work. So, in closing, I'd like to thank all of you who've had the fortitude to hang into the end, and I applaud you. And that's the end of this presentation, by the way. My special thanks to the shareholders for your ongoing support and your trust in the vision of the company. And the team's energized. The opportunities that lie ahead are meaty and exciting, and we look forward to progressing the project and executing on some of these strategic initiatives. So, Stuart, that brings me to the end of the formal company update. I'll hand back to you and happy to take some questions.
Yeah, Rod, thank you so much. Fantastic presentation, extremely informative. I had a look just as you were presenting, and there was about 25 million shares traded and up about 40% at the moment. So congratulations. Obviously, the market's taken kindly to it. We have had a lot of questions come through, so we will get straight into those. Can you walk us through the main advantages of the new concentrator flow sheet and how this positions Podium compared to your peers?
I can certainly talk you through how, the main advantages, Stuart, and we probably touched on some of those. I think firstly, it's just the robustness and the flexibility of the flow sheet. That ability to use standard equipment to produce a first product, a flotation product, and then take a second bite of the cherry really positions us for the variations and the other ore zones within the business. So, that's an outstanding achievement for us. I think the other advantage is the fact that we are using standard industry technologies. These have been around in processes that have been de-risked 50 years ago, perhaps more in the PGM sector. So there's nothing new here in the technology. The secret for us was applying that technology and that know-how with an incredible group of people that have built and run plants for many, many years, and applying that to the mineralization and the specifics of our ore body, and then milk that through the recoveries and the products. And that's the third advantage here. The fact that we've got two products that are clean, they are, I would hesitate to say market ready, but certainly, we believe that they will be compatible with existing refineries, gives us a lot of optionality in terms of how we monetize those and how we earn revenue from that. So, those are the advantages in our case. A clean, high grading product such as the two that we're producing without chromite, I think it's going to be very attractive and well received by the refiners.
And secondly, a new concentrator flow sheet achieved approximately 80% 3E recovery and a 50 times upgrade ratio. What is the rationale in scaling up from lab to pilot plant? And what are the main outcomes or milestones that you're after that will see the project drive forward?
Yeah, good question. I'd love to know who's asking these. These are meaty. We're students of metallurgy, and we've been around a long time. And we learned that many years ago that the secret to actually de-risking these processes lies often not in trying them once you produce the plant, but actually in piloting. So the essence of piloting is to take this technology, scale it up into something where you can get near to production data and information out of that. And that's what this piloting is all about. It's taking those known technologies, applying them at scale, and getting real life data. And the real life data is going to be significant. We'll be getting data from how much what our reagent consumption is, all the way through to costs, through to real operating information. And most importantly, we'll be getting information about the product. So that information will go straight into the engineering phase. So it allows us to accelerate that. And at the end of this piloting, which will run for about 6 months, it allows us to give real live data to our engineering team and go straight into a feasibility, which we can knock off in a much shorter time period. So the advantages of piloting are not only de-risking the process and giving us repeatability and reliability, it's an opportunity at scale to optimize in real live operating conditions, real data that we can rely on for engineering and feasibility. And we think that that'll accelerate us straight into feasibility study, but time will tell. And then most importantly, it's the information, Stuart. The information around the product, actually being able to make some product allows us to go and sit at the table of the refiners and start to have real conversations with them about the attractiveness of our product and how we're likely to be able to monetize those through offtake agreements or other arrangements. So, a lot of value that we're going to get out of this next phase.
And can you provide further details on the 2 distinct products that Podium is planning to produce? Specifically, what are the products and how do you envision their respective market opportunities and strategic advantages?
At this stage, the first one is a standard flotation concentrate. That's what we internally call product 1, and that's right now grading at, through lab scale, 57 grams a ton of 3E. And that, with low chromite and the nickel and copper proportions that we have ahead of us, we believe, will be completely compatible with any refiner and go straight into a furnace. By the way, my team is telling me that we can ramp up those grades, and we certainly will over the next few months as we start to optimize that circuit and get even higher grades. And those, the importance of grade in this case is that it impacts on the payabilities that you receive if you sell or refine those products. So that's the first one. The second one, much higher product, much higher grade, and the conversations that we'll be having are where we fit that into the downstream circuits. But of course, we've got optionality here to actually blend the two together and use the higher grade to upscale the flotation concentrate. So a lot of optionality, for how we monetize that. And that doesn't touch on the products that we're going to be getting through those other mineralized zones. And that will be a part of the, conversations going forward over the next few months that we'll be having in the project team, and then disclosure to the market as and when the time is appropriate.
And you've highlighted the ultra low chrome concentrate as a competitive advantage. How has early feedback been potential refiners or partners regarding product compatibility?
Well, the information that we have to date, we're sharing with certain parties that are friendly to us, and they're still talking to us, and they're very keen to talk to us. So, we can see that as a measure of their interest in understanding our product further. But chrome in particular, to touch on that, is a deleterious element that actually has a safety implication, because a lot of these concentrates go straight into furnaces, and you want your chrome content to be as low as possible. And chrome, largely because you need to run your furnace very high temperatures, that creates safety factors and safety influences in the furnace. So it's not only just about the chrome itself and how it impacts; it's actually impacts on the safety. So the off takers will look to always purchase or blend in products that have as low chromite content as possible. And we're certainly at that point where our chrome content is de minimis, if anything.
Parks Reef oxide zone appears to be at or very near surface, but I do see a mention of grades, or sorry, I do not see a mention of grades. What opportunities does the oxide zone present for Parks Reef? And is this a priority for the team?
It certainly is a priority for the team. All of our work, 99% of our work to date has been on the sulfide product. The oxide stretches down to, we always notionally say about 50 meters, and it's a couple of meters from below surface. There's a bit of surface cover, and it presents the same grades as you see in the sulfide. So the same copper gold zone, the same PGM zone. In fact, there are parts of our oxide where the grades of the PGMs and the copper in particular and gold are higher, particularly on the eastern extremity of the ore body. So, firstly, we've got an incredible source of PGMs, copper and gold in that oxide zone. What are the opportunities? Well, the opportunities for us could be enormous. Mining that oxide zone would be through open pit as opposed to as the sulfide is underground, and mining costs are significantly cheaper. The capital costs would be lower. And we believe, but this has to be proven, that the technology that we have, particularly in that value recovery circuit, is very amenable to recovering at least some of the metals in that oxide zone. So certainly a lot more work that's going to be done. It's a key focus going forward. And, I've mentioned a couple of times in today's presentation that in addition to the pilot plant, we're all about looking at those mineralized zones. The high grade, that work needs to be done in the lab. The copper gold zone, which is an incredible opportunity for us, and the oxide zone. And again, I just say, let's see how that all unfolds. And as it unfolds, we've got potentially a very great opportunity through that oxide.
And Parks Reef resource has 7.9 million ounces of PGMs. And you've commented earlier that there is further high grade and growth potential at depth. How are you prioritising future drilling to demonstrate this growth potential?
So, the resource itself at 7.9 million ounces, and we are going to build this, our mines in unit operations. And I think we've mentioned before that we see a unit operation being about a 2-kilometer strike. So you can see over 15 kilometers potentially how many unit operations you can have. The 7.6 million ounces at about 100,000, notionally 100,000 ounces, which is a standard unit if you're in South Africa, already has over 40 years of mine life. So from a resource point of view, we've got more than enough to commence the studies and to commence the operation. But you correctly said that as we're going deeper, we're starting to see that the grades are going up. So it's a balance, Stuart. It's a balance between continuing that momentum around the metallurgy, because that's what unlocks this project. It's going to unlock West Australia's industry to develop this and to build the industry around that. But at the same time, as a part of this capital raise, there will be a few very targeted holes to start to fill in that gap between the 250-meter zone, which is the bottom of the existing resource, and the next level, which is 500 meters. We're very comfortable in what we've seen at 500 meters. We're actually very comfortable in the geophysics around 2 kilometers. But some of those holes will give us that opportunity to start to give more comfort around the continuity. When we're in production, that's the ideal time to continue drilling, because you drill from underground. But for now, our focus is that first package, but giving upside without wasting too much money on that, so that we can put as much as we can into the project itself.
Been quite a few questions come through that are similar. So we are grouping them together at this stage to get through as many as we can. Next one coming in, can you expand on the upside from the copper gold zone and how co-mining it might impact project economics?
Really important question. And, if I had to disclose to you that until December last year, I didn't know about the copper gold zone until I went onto site and we were drilling some samples, and our geologist said, you can see copper. And I said, no, you can't. And they showed me that you could. I didn't even know about it. So, this is a this is a fantastic present that this Parks Reef ore body has given us, and it looks like it keeps on giving us these upside surprises. So the copper gold zone is contiguous with the PGM, so lies right above it. So from a mining point of view, if we were to mine the oxide, we'd be taking the copper gold zone out as well. If you're underground, it allows us to then make decisions depending on economics about extending our mining cut from the PGMs into the copper gold. We've done a little bit of work on that copper gold from the underground sulfide ore body, and we've been pleasantly surprised by the recoveries. We're getting over 85% recovery out of that copper gold zone, recovering high percentages of the gold. And we started doing some work around the products that we might be able to produce. I don't want to say too much more around that, Stuart, but copper is a very attractive mineral. Our PGM ore body doesn't have a lot of copper and nickel in it. This is an opportunity to think about either co-mining the two together, which will enhance the economics of the project itself, or potentially producing a separate product. Time will tell as we go through the work over the next 3 to 6 months. But a lot of upside and a lot of excitement around that.
What does development modelling and accelerate feasibility studies and product data for downstream engagement look like?
What it is it's a collection of all of the incredible engineering data and production data that we'll get through piloting. So, basically what we're saying is that we have a very experienced team. It's not only just a laboratory team, we've got project builders, project developers in our team. And we'll be taking all of that information and doing some advanced engineering and other work with that data, which allows us to give a package straight through to the engineering company that will eventually do the feasibility. And as someone that's run EPCM and engineering businesses, I know that the advantage of receiving something which is near to feasible level, which is what we'll get out of that pilot plant, really allows you to accelerate through. And all you need to do is just do your final engineering designs and put your capital over that. So that's what that package is. In terms of downstream engagement, don't want to say too much more, but if we have some products in a little bottle, you can imagine how easier our engagement is going to be with all of the parties that we've got great relationships with, including Johnson Matthey, who are currently on our register. And as you may know, that Johnson Matthey is one of the largest refiners in the world outside of the 4 South African producers.
Rod, you're out of the hot seat in a minute because this is the last one. Considering South Africa's dominant role in global PGM supply, what are the main risks associated with this region, and how might these factors affect the wider PGM market and pricing?
Now, the last thing I want to be doing is talking, too much about the South African producers. Stuart, we're an Australian business, and proudly that, and we're about creating a low geopolitical risk jurisdiction to contribute PGMs into what we see as a growth market and a very exciting market. But I think it's no secret that the South African producers are facing some challenges. Their mines are getting deeper. Their resources, are being consumed, and they've been around for a long, long time. It's a geopolitically difficult environment to attract capital in. They've got strong balance sheets, so they're certainly strong businesses. And the last couple of years with low metal prices has meant that, those have put massive constraints and strains on those companies. And the PGM sector, it's very difficult to respond quickly to supply changes. You've got your existing businesses, but the opportunity to just bring on more supply doesn't happen overnight. Anecdotally, someone said to me that we're talking 5 to 10 years to bring on a new mine in South Africa. That's probably about right. So, I think that the decline just means that supply is probably going to remain under more pressure going forward for a period of time before people can respond. And whether South Africa will be able to respond meaningfully, that remains to be seen, Stuart. But that just means that you've got a supply squeeze and a demand growth. Where is the PGMs going to come from? Firstly, very advantageous for West Australia, and that's what we're positioning ourselves for. But secondly, you've got to believe that once all those surface stocks are being consumed, there has to be another price response.
Rod, thank you so much. That's all that's come through for today. Some great questions from attendees, so thank you for sending those in, and we really appreciate you taking part in this Q&A. For more information about Podium Minerals, you can head to the company website, podiumminerals.com, or you can follow the company's extensive social media channels. Thank you to everyone for attending today. It's certainly an exciting time ahead for the company. So Rod, I wish you and the team all the very best, and we look forward to chatting again soon.
Thank you, everybody.